All right, welcome to The Explainer. Today we're diving into one of the most powerful, but honestly most overlooked financial documents out there, the cash flow statement. If you really want to understand what's going on inside a company, beyond the flashy headlines about profit, you are in the right place. To get us started, I want to kick off with a question that gets right to the heart of why this is so critical.
So let's get right to it. Picture this. A company is reporting record profits. Everybody's celebrating. The stock might even be going up. But could that same company actually be on the brink of going bust? Can a truly profitable company go bankrupt? Just think about that for a second.
And the answer, which might be a little surprising, is a huge, resounding yes. It happens way more than you'd think. And it's all because of this one crucial idea. Profit on a spreadsheet is not the same thing as cold, hard cash in the bank. A company can look profitable on paper, but completely run out of the actual money it needs to pay its bills, its people, and its suppliers.
So how do we see past that profit mirage and find out what's really going on? Well, we use a tool designed for exactly that. I want you to think of the cash flow statement as an EKG for a business. It's the one test that shows you the real-time health of its financial lifeblood, which is, of course, its cash.
So what is it exactly? At its core, it's basically a log of all the cash moving in and all the cash moving out of a company during a set period, like a quarter or a year. We're not talking about theoretical sales or future earnings here. This is about the actual dollars that came in the door and the dollars that went out.
And, when we say cash, it's a little broader than just the bills in a drawer. Of course, it's the money in the bank, but it also includes something called cash equivalents. The easiest way to think about these is they're super safe, super liquid investments that can be turned back into cash almost instantly. So for all practical purposes, it's cash. It's all about a company's immediate spending power.
Okay, so when a doctor reads an EKG, right, they're not just glancing at it. They're looking for specific patterns to figure out what's going on with the heart. It is the exact same idea with a cash flow statement. To get the full story, we have to look at three different, very distinct areas of activity. These are like the three vital signs of a company's cash health.
And here they are. Every cash flow statement you will ever see is broken down into these three sections: operating, investing, and financing. And once you understand what each one is telling you, you've basically cracked the code. So let's start with the first one, which is arguably the most important of all.
First up, operating activities. I love this analogy. This is the company's day-to-day pulse. This section answers the most fundamental question. Is the core business, the thing the company actually does every day, like making widgets or selling software, is that business actually generating more cash than it's using up? A healthy, positive number here is an absolutely fantastic sign.
Next, we've got investing activities. If operating was the pulse, this is the company's long-term health plan. This is where you see how the company is spending its money to grow and get bigger in the future. Is it buying a new factory, investing in new technology, selling off an old piece of land? Now, a big negative number here isn't necessarily a bad thing. A lot of times, it just means the company is investing heavily in its own future.
And third, financing activities. This is kind of like the company's external life support system. This section shows us how the company is getting its money from the outside world. Did it issue new stock to bring in cash from investors? Did it take out a big loan from a bank? Or on the flip side, did it use its cash to pay back debt or pay a dividend to its shareholders? It's all about how the company funds itself.
Okay, so quick heads up. If you go and pull up a real-world cash flow statement after this, you might notice that first section, operating activities, can look one of two different ways. Don't let this throw you off. They are just two different ways of doing the math to get to the very same number.
The two methods are called direct and indirect. The direct method is simple. It just lists out all the cash that came in from customers and all the cash that went out to suppliers. But the one you're going to see 99% of the time is the indirect method. This one is more of a puzzle. It starts with that net profit number and then makes a bunch of adjustments to work its way back to the true cash number. But here's the key. It doesn't matter which road they take. They both lead to the exact same destination, the final true number for cash from operations.
So, we've gone through the what and the how: operating, investing, financing. But let's zoom out for a second. Why does knowing all this give you such a massive advantage?
whether you're an investor, an employee, or just somebody who's curious.
Because at the end of the day, the power of this statement is that it just cuts through all the noise. It shows you a company's real, honest-to-goodness ability to generate cash and pay its bills. It tells you if they can afford their future plans. And because cash is cash in any country or any industry, it lets you compare different companies much more accurately. It is one of the single best indicators of a company's real strength.
And if you take away just one thing today, I want it to be this line from our source material. Historical cash flow information is taken as an adequate indication of future cash flows. Let that sink in. What a company has done with its cash in the past is one of the very best ways to predict what it's going to be able to do in the future. It's really that simple and that powerful.
So the next time you're looking at a company and you read the headlines, I hope you feel like you've got a new tool in your belt. You can ask yourself the question, am I just going to check its profit, or am I going to check its pulse? Thanks for watching.